So India's trade deficit just went through the roof, breaking all the old records. And that's got a lot of people worried. But what's really going on behind that big, scary number? Well, in this explainer, we're going to dig past the headlines and figure out what this crisis really tells us about the weaknesses in India's economy.
All right, so here's how we're going to break this all down. First, we'll look at that jaw-dropping deficit number. Then we'll dive into why it happened. We're talking about everything from a major tariff shock from the US to a sudden rush for gold. And finally, we'll try to figure out, what does this all mean for the future of Indian trade?
Okay, first things first, let's get into the numbers. Because to really get why this is setting off so many alarm bells, you have to appreciate the sheer scale of what we're looking at. This isn't just a small dip or a minor change. And there it is, $41.68 billion. That is a massive, record-breaking gap between what India is importing versus what it's exporting in just 1 month. A number that big doesn't just pop up out of nowhere. It's a huge red flag that needs some serious explaining.
But, that record number is really only part of the story. The real shocker is how fast it happened. I mean, look at this. The deficit didn't just slowly climb up. No, it exploded by almost $10 billion in just 1 month. That's the kind of sudden jump that really has economists on edge.
So, what on earth is causing this surge? Well, a really big piece of the puzzle comes from an external shock, and it's coming from India's biggest customer by far, the United States.
And to really grasp the impact of that shock, you just have to see how much India relies on the US market. I mean, since 2018, it's become the #1 customer. And for a long time, that was a huge advantage, right? But now, now that dependence is starting to look like a major vulnerability.
And here it is. This is the shockwave. A massive 50% tariff slapped on a whole bunch of Indian goods, which kicked in back in August. Just like that, overnight, these products got way more expensive for people in the US, and, demand just fell off a cliff.
And what's really important to understand is that this wasn't just some random across-the-board tariff. It was a precision strike. It hit some of India's most labor-intensive sectors. We're talking industries like garments and engineering goods that provide jobs for millions of people. And you can see right here, the drop in exports was just devastating.
Okay, so that's the story on the outside, the tariff shock from the US. But to really get the whole picture, we've got to look at what was happening inside India, because a totally different kind of economic anxiety was brewing at home.
Just look at this. Gold imports nearly tripled compared to last year. Now sure, you always see a bit of a bump around festival season, that's normal, but it jumped this big? No way. This tells you something much, much deeper is going on.
And it wasn't just gold. The rush for silver was even crazier. Imports jumped more than 5 times. This is not about people buying jewelry for weddings. This was a calculated, strategic move by investors, plain and simple.
There's a term for this kind of behavior. It's called economic hedging. It's what people do when they get nervous about the economy, when they're worried their money's losing value. They run to something they trust, a safe haven like precious metals. So this huge surge in gold and silver imports, it's basically a giant blinking sign of widespread economic uncertainty.
All right, so let's connect the dots here. We've got 2 big symptoms. Exports are dropping and gold and silver imports are surging. So what's the underlying condition? What's the disease, really? A huge part of it comes down to the weakening rupee. As the rupee loses ground against the dollar, everything that's imported suddenly gets more expensive. And when people see that their cash is buying less and less, what do? They swap it for something they think will hold its value, like gold. It's a textbook move when you're worried about your currency.
But here's where it gets kind of weird. A weak rupee creates this strange paradox. Think about it. If you're an Indian manufacturer trying to sell your stuff abroad, you need to keep your prices competitive. So what do? You might actually end up buying cheaper components from other countries instead of more expensive ones made at home. So you're trying to boost your exports, but to do it, you have to increase your imports, which of course just makes the trade deficit even worse. It's a real catch-22.
So, all of this leads to the big $64,000 question. Is this whole thing just a temporary blip on the radar, a short-term crisis that will blow over? Or are we seeing the start of a massive, permanent shift in India's economy?
Honestly, right now, it could really go either way. On the one hand, it could just be a blip. A painful but temporary reaction to those US tariffs, something that could maybe be fixed with some negotiation. But on the other hand, this could be the start of something much bigger, a difficult but maybe necessary structural shift away from being so dependent on just one customer.
So, blip or long-term shift. Either way, the problem is here and it's real. So the question becomes, what's the path forward? How can India build a trade future that's a lot more resilient?
Well, experts are pointing to a kind of five-pronged strategy. First up, find new customers. Diversify markets so you're not so reliant on the US. Second, make more stuff at home. Bolster domestic manufacturing to cut down on all those imported parts. Third, get to the negotiating table and try to get those tariffs reversed. Fourth, you've got to help the industries that were hit the hardest. And finally, you have to work on stabilizing the rupee to calm down all that economic anxiety.
And that really leaves us with the ultimate question. When we look back on this moment years from now, what will we see? Will it be remembered as just a damaging crisis? Or will it be seen as the painful wake-up call that India needed? The catalyst that finally forced it to build a stronger, more diversified, and more resilient economy for the future. Really, the choices made right now will decide everything.